events or anything like that that have happened yet?
No, and it's an interesting topic. So on that property, we've probably increased NOI about 50% over the 3 years. And even at a 6 cap, when we bought it, cap rate in Greenville was maybe about 5. Today it's about 6. I would say the property today is probably worth high fours, 4.7, 4.8. So we've made about 2 million on the property. Our quandary is we have 3.86% debt for another 4 years.
Mm-hmm.
So we could refi, we could pull out capital, we could return capital to our investors, but we'd have to borrow and pay 6.5%. So in my mind, it doesn't make sense to get rid of that 3.86% debt that we've got another 4 years to go. And all the assets we own, we have fixed rate debt on them, average of about 4%. So we have them from high 3s to low 4s, and they all have about 4 or 5 years to go. So we're kind of in a holding pattern now because they're operating, they're generating good cash flow. This property's probably now producing 10% cash on cash, which we're distributing to our investors. But we don't want to sell the property. It doesn't make sense to refi at 6.5%. So we're going to hold it. And so I think the hope would be rates drop here in the next 18 to 24 months, maybe allow us to refinance. Or if somebody makes us a blow your doors off offer, maybe we sell it then. So we're just holding. All the properties are operating. We've paid distributions every time we've promised in the amount promised or more. So at this point, it's just steady as she goes.
So this is the fun part of the show for me where I run the numbers. So the equity you've built averages just over $55,000 a month over the 3-year period.
You mean we've built equity of
200 million?
About 2 million? Yes, I would totally agree. We've gone from about 2.8 purchase to about 4.8 now. So we built about 2 million equity. The total raise on this deal was $1.5 million. So basically, if we were to sell today, our investors, big picture, who invested $1.5 million would get back 3.5 million.
Why would you not do this?
Because then the question is, where are they going to put that money? So yes, and it's an interesting dynamic because as a general partner, most of our compensation is on the back end when the property is sold. Okay, so there's a selfish personal incentive for us to sell, but we're in this for the long haul. And so our guiding principle always has to be what's best for the investors. Right. And so in our mind, yes, we could take our profit, take our split, our investors could be happy. But then the question is, where do you put that equity? And could we find anything better? I don't think we can find anything better. So the market's not going to dry up. If rates drop down, because this valuation's at a 6 cap, if rates drop, value continues to go up. So we're just going to ride it out and see. And maybe we refi, pull some capital out, hold the property long term, and use that capital to go buy something else. Greenville is a really strong market, midway between Atlanta and Charlotte. BMW is here. Every X car in the world BMW makes is made in Greenville, Spartanburg. North American headquarters of Michelin is here. GE's here. There's a booming tourism industry. So it's really a solid place, population growth going. So long term, it looks good.